Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Tom K. Wilson, provides you with insight and guidance from his years of experience as a successful real estate entrepreneur on how to buy, sell, finance, and invest in real estate, and much more. Now, here's your host for Real Estate 360, Tom K. Wilson.
Welcome, and thanks for tuning in to our Real Estate 360 program, your number one source for all of your real estate needs and education. We're broadcasting live from the Toll House today in Los Gatos and from the number one radio station for business in the San Francisco Bay Area, KDOW AM 1220, the Wall Street Business Network. I'm Tom Wilson, your host for the 2 p.m. Wednesday edition of Real Estate 360. It comes to you daily, Monday through Friday at 3 p.m. and Wednesday and Thursday at 2 p.m., along with my co-hosts Joe Cachera and Lori Graymont and Mike D'Ambrosio. If you can't make the live show, you can catch our podcast on RE360Radio.com and my programs on TomWilsonProperties.com or on iTunes or on YouTube. We have a great program for you today with our frequent guest, Richard Crouch, who's going to be talking about the general real estate market, what happened in 2013, where we're headed, and what kind of market conditions you can watch and what you should do about it. Richard Crouch is with Alain Pinel Realtors. He's a top sales agent for Alain Pinel. He's also associated as a financial investment advisor with Transamerica Financial Advisors. And he is an entrepreneur from the high-tech industry that also made the transition over into real estate. I want to let you know that if you would like to sign up for a weekly economics newsletter that tells you what's going on in a snapshot and a quick read in the world of economics as it applies to real estate, you can go to TomWilsonProperties.com and sign up for that weekly newsletter. You can also request a document or a white paper that tells you how to select the best metropolitan area and the best product to invest in if as an investor. And that's a 19-page report with lots of data and graphs and information that you can use to go through the methodology of how to select that. So let's get started with today's program. And welcome back, Richard.
Hey, Tom, thank you. Good to be here.
Tell us, Richard, if you will, kind of go over what happened this past year in the real estate market. Let's look at that in review, and then we will both nationally and California and locally, and then we'll move into what's happening this year and what directions we're headed. It's always good to look at history so we can kind of figure out what happened, and sometimes there's some things we can learn in there that are predictors for where we're headed.
Yeah, no, that's absolutely true. In fact, I think to understand 2014, you absolutely need to understand what occurred in 2013, and we're going to profile that for you. To say the least, it was a big year for investments, whether it be in the stock market, whether it be real estate, or any other investment category. But obviously, as we all know, the future is not predicted by the past, and we have to understand what's going on dynamically in the future to be able to know where we're headed. So let's just start for the moment by saying that in 2013, one of the most obvious things was that we had a big jump in real estate wealth of homeowners. Let me just give you a sense of that across the country. And this will be the median prices and then also sales. So median prices in the West, I'll start there. $289,300 is the median price, and that was up 15.5% from the year before. So that was actually from 2012. In the Midwest, the median price $149,600. That was up 5.5% from the previous year. And then in the Northeast, the median price of $244,700 which is actually not broken out here. It's lumped into, well, I'm sorry, yes, it is 5.5%, and the Midwest was 7%, so I missed that. Sorry for that. Now, on sales, the West experienced a drop of minus 8.1%, 1,030,000 transactions. In the Midwest, 1,040,000 transactions, which was up 2%. In the Northeast, 600,000 transactions, up 7.1%. And in the South, 1,920,000 transactions, by far the largest, up 3.6% from the previous year. Now,
and those were sales, right?
That was transactions, sales,
volume.
yes, and
so we're talking about volume, not price. Yeah,
that's right. There was volume and the median price. Now, in terms of ownership costs in the top 25 U.S. cities, I'm not going to go through 25 cities, of course, but I can just give you a sense of the general overall summary. So taking San Francisco, where...
And by the way, those that are really into data, we'll post this on our website and on your website, which we'll give them later.
That's correct. That's correct. Now, a lot of good data, a lot of good infograms, pictograms, and so on, which will be very helpful in understanding all this. So what this particular topic is about is what salary is required to buy the median home price. Okay? So in San Francisco...
Which relates to affordability index.
That's correct. That's correct. So in San Francisco, the average home price, that's the Bay Area, $682,410. And with the multipliers typically times 6 to figure out how much you have to be earning in order to qualify. Okay? So that yields a salary of $115,000 required in order to buy a house at the median price point. The average mortgage payment in that case is $2,695 a month. In Cleveland, Ohio, salary required $19,435, average home price $112,800, and the average mortgage payment $453.50. Big difference.
Amazing how different it is from one metro to another.
Absolutely.
I think that's something that still a lot of people don't fully appreciate. And even though I'd been an investor for 2 decades, it was quite a while before I really saw how different it was. And when you go back to the 60s, early 70s, there wasn't that much, but there's been a lot of separation. So you really have to evaluate where you invest, not just in your backyard or if where you're going to live. If you have to decide if you want to live somewhere, whether or not you can afford a property in that area where you want to have your job. Right?
Well, that's exactly right. And it's obviously a function of where industry has catapulted itself. Certainly with high tech in the San Francisco Bay Area is a major factor that gets stronger and stronger every year. And then, of course, in the Midwest and some portions of the East, they've had to recover from the downturn of the recession in the auto industry and so on. But on to a couple more. Philadelphia, the average home price of $214,000. The salary required is $36,836, and the average mortgage payment $859.52, for pretty close to double that for Cleveland, but still less than 25% of San Francisco Bay Area. And then Boston, the price that the salary rather $51,000 in order to achieve the to be able to get qualified for the mortgage, which is $1,191 a month. So we've got again $2,695 on the West, $453 in Cleveland, $859 in Philadelphia, and then in Boston $1,191 per month. That's the difference. One thing that's interesting is we had a big slowdown in sales volume at the end of 2013, and that has actually reversed itself. The volume in the last 6 weeks, at least, has jumped from let's see here, the sales volume from 160,000 up to 220,000 in average units per month. So there has been an increase. There has been some increase in revenue to make that possible, but not enough to to get us out of the situation we're in where we can't meet demand fully. Now, for the Bay Area, home sales dropped to a 6-year low in 2013. Prices were still up sharply year to year, however. Okay. And there's a number of categories that we won't talk about in detail that are profiled on the website. For example, the mortgages, adjustable mortgages, jumbo loans, government-issued FHA home purchase loans, distressed property sales, foreclosure resales, short sales, the number of absentee buyers, plus those who came in and paid all cash. All of these have had an impact on our market, and it's important to understand that, but we don't have time to really dig into each one. Okay, now since we're talking about the Bay Area as a whole, Tom, let me just sort of talk about the individual counties so people can get some perspective on that.
That'd be good.
Okay, so starting off with Alameda, sales volume from 2012 to 2013 was down 4.4%. However, the median price was up a nice 28%. Contra Costa, the volume down 23.1%, and the median price up 21.4%. For Marin, minus 24.4% volume, and median price up 14.3%. Napa, the volume was down 14%, and the median price 21.4% up. Santa Clara, by far the largest overall in terms of sales volume, was still down 13.4%. The median price, however, was up 14.8%. San Francisco, down minus 17.7% in volume, up 12.9% in price. San Mateo, up 18% in San Mateo volume, and the price up 25%. That's the exception to all the others. Solano, minus 21.8% in volume, up 24.8% in median. And then Sonoma, the last one, down 16.2% in volume, up 20.3%.
Okay, and these are over the course of the year for 2013, right?
2012 to 2013.
2013.
That's right.
Okay, we have live today in the Toll House in Los Gatos, and on KDOW 1220 AM, we have Richard Crouch on the RE360 program, and we'll be back in just a couple of minutes and continue discussing the current market conditions in the nation and Bay Area.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back. This is Tom Wilson on Real Estate 360, celebrating our one-year anniversary at the Toll House live in Los Gatos. And this is the Real Estate 360 program with Tom Wilson here at your 2 o'clock Wednesday edition about real estate investing in the marketplace. We have with us today in the studio here at the Toll House, Richard Crouch, who's an entrepreneur from Silicon Valley, turned Alain Pinel Realtor, top salesperson, and also an investment advisor for Transamerica Financial Advisors. We're talking today about the marketplace, what happened in 2013, and where things are headed, and what you should know about it, and what you can learn about what you should do next. Richard, continue, if you will.
Okay, so basically, in order to understand, kind of where we're going from here, there's a lot of data on a U.S. economic perspective that would be helpful for anyone to understand everything else that we might talk about. I'll share 2 statistics in that regard, but there's about 10 such groups of statistics that'll be on our website for you to dig into that deeper. So in the U.S. economy as a whole, for example, from 2012 to 2015, basically grew from 2.8 to 2.9. So it's a relatively, that's in actual real GDP, okay, annual growth. So not a big change, but a fairly consistent change, okay? And then secondly, the unemployment rate, which of course has been a big factor in the recovery, from 2012 at 8.1% down to 6.3 in 2015. So those are two of the statistics we hear about most. There's other things like interest rates. We'll talk more about that later.
Okay.
Mortgage rates, again, we'll talk about that. Housing indicators, medium home prices, we've already talked about that some. And also the home affordability index, which you just mentioned, which from 2012 was 196, and 2015 is expecting to be 120. That means there's a lot of people who won't be able to afford to buy a home by 2015 unless they perhaps try to do so now.
Whether it be an investor home or a owner-occupant home, either one.
That's right.
Because all of these metros now are on the upswing. We don't know how much longer. Different cities and different neighborhoods quite differently. As I always tell people, the market is thousands of submarkets. So we're giving you general information about general areas, but remember, you've always got to go find the precise data and the exact area that you're considering about buying to own or buying to invest. And your best way to do that is get a professional who's extremely familiar with that particular area.
And let me just say that the investment in real estate on the part of real estate investors has had a major positive impact on neighborhoods and cities. We ourselves in my team have completely renovated about 8 homes in 2013, and we're seeing that the amount of investor purchases has been very, very high, and it is sometimes frustrating for buyers, certainly. But when an investor gets in, they do a big turnaround on the property, and that's a plus for everybody when in the medium to long term.
There's certainly been a huge number of blighted properties that have been taken off the market in a neighborhood and renovated by investors and put back on the market so they're available for either renters and their landlords or for owner-occupants that otherwise would be sitting there keeping property values down and keeping tax revenue down.
And I will say that right now today, in May 2014, as we speak, things haven't changed much from 2013 in terms of inventory, which means the impact of investors is still going to be significant and certainly a challenge to buyers when it comes to finding that home.
You know, in early 08, in the kind of beginning of the crash, I remember headlines every month and every quarter was always projecting that there'd be a floodgate of inventory coming out from all the foreclosures. And Sean O'Toole, we're a good friend with Property Radar, was the first one I ever heard who said, nope, it's not going to happen. Political pressures will keep those floodgates from opening to protect their bank friends, and that inventory will trickle out for forever until all these foreclosures have been pretty well eliminated. But because of that, it's taken a long, long time. We have with us at the Toll House today in Los Gatos a 1 year anniversary of being here and doing a live show and a social following. So come out and join us. This is have Richard Crouch today, an expert in market analysis and in real estate, who's with us talking about where we've been and where things are headed here in the marketplace. This is Tom Wilson, KDOW 1220 AM. We'll be right back.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back to Real Estate 360. This is Tom Wilson, your host for the Wednesday 2 o'clock edition. We're celebrating on KDOW 1220 AM. We're celebrating the 1 year anniversary of doing a satellite show once a month. And we're at the Toll House in Los Gatos. We have with us today Richard Crouch, a frequent guest, who's a Silicon Valley entrepreneur turned top real estate producer with Alain Pinel Realty, and also investment advisor with Transamerica Financial Advisors. Talking about the marketplace in general, what happened to 2013, and now we're starting to talk about where directions are headed and what's going on. So, Richard, saw some headlines kind of early part of this year saying that springtime things were going to be different. Are they different?
Well, we thought that they would be different, and I can't say that they have been different, actually. I've sort of modified that headline to say spring-summer ? Because so far, this spring market has not materialized. And all you can say about that is that sellers have decided to sit out the spring market, which is the best market of the year each year. That tells you that sellers seem to have a lot of confidence that values in their properties are going to go up, continue to go up. That's always a little bit of a gamble, because you can never be too sure about that.
Think that's the main contributor? Sellers getting greedy now?
Absolutely, absolutely. I mean, after going through the recession, I don't blame them necessarily, but there are a lot of reasons why selling now really is a smart move. We'll try to cover some of that.
And even though we have significant percentage now who are upside down, who are no longer, there's still a sector that's upside down and waiting to get healthy again before they'd consider doing something. Yeah,
that's true. And the previous segment of the program, you did mention about short sales and foreclosures and all that. I just want to add that in reality, those events did occur, but really did not distort the mortgage, sales of homes equation. It was all taken in stride. And that's a good thing, because it does mean a lot of people now are no longer underwater.
And certainly because of our significant job growth here in the San Francisco Bay Area, we certainly have recovered faster than most metro areas in the country. So there's probably less of a foreclosure factor, but everybody reads the headlines, and as long as there's still underwater properties throughout the country in various places that haven't recovered as much, it affects people's confidence.
Right. All right. So in the last 3 months, which effectively is the spring, I don't want to totally mislead in that the volume of sales has gone up, but not nearly enough to really be what you would expect in a spring market. So just the fact, though, that the sales transaction volume has gone up in the last 3 months, that gives us some hope that we may have a summer market that may not be as big as a spring market, but there's a good chance we're going to see quite a bit more activity as we move into the summer.
And by activity, you mean resulting from having more inventory?
More inventory, absolutely, mm-hmm. Absolutely. I mean, the headlines have continued to talk about a flood of listings coming to the market, but again, it has not happened yet. Mm-hmm. Okay, so I think when we come back from the break, what we can look at is what are some of those factors affecting sellers, and what are some of the factors affecting buyers to better understand this.
Okay, we'll have Richard Crouch back with us in just a moment after this short break, talking about the marketplace now, what's going on, and where things are headed, and what buyers and sellers should do. We are at the Toll House in Los Gatos Live, KDOW 1220 AM. This is Tom Wilson with Real Estate 360, and we'll be back with you in just a few minutes to further talk about the marketplace and where we're headed with Richard Crouch.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back to Real Estate 360. We're with Richard Crouch in the Toll House in Los Gatos today. Hotel, where we're celebrating our 1-year anniversary of doing shows on Real Estate 360 here for our one satellite program per week or per month. And Richard's talking to us about the general marketplace, where it's been, where it's going. And let's talk a little bit about buyers. What's their mentality right now, and what's affecting their decisions whether or not to buy something? And this probably is a little bit more owner occupant than it is investors, but affects both.
Well, buyers, really do have a dilemma right now because inventory is really difficult to find. Things have been very quiet for our buyers and for sellers. We talked about that in the previous segment. So at the moment, the best thing that buyers can do, of course, is to make sure that they're pre-qualified for a loan and be ready, set, go as soon as inventory starts to jump. Now, it is going up some, and so you should engage with a realtor to help you assess what is out there and what you're up against. Those that do that will find it much easier and quicker to be able to purchase something when the inventory does start to go up. We'll talk a little bit more about buyers and factors that will affect them one way or the other, affordability, whether they have a chance to buy or not. But let's now shift over and talk a little bit about what is happening with sellers, because what we know is that in 2013, we had a lot of volume, we had a lot of sales, but inventory was very, very tight, which forced prices up significantly. That has not changed so far in 2014.
And certainly whether it's owner-occupant or the investor world. Wilson Investment Properties continues to probably have to weed through and make offers on about 40 properties to find one, which we're still doing and are able to because we're getting more sources. But it's difficult. What's interesting, we're seeing now more owner-occupants kind of be a portion of the ones that we're able to buy from than just bank. So it's affecting both worlds.
Well, I'm glad you mentioned that about 40 to 1, Tom, because a lot of buyers are going to feel better about investors knowing that. I mean, I think they just figure they go out and buy a house just like that.
They do. They have no idea how much work goes in. We literally put out thousands of offers a year to try to find the good quality product for our clients. It's a lot of work. And
all the more reason why that very activity is so important to the market. So let's just talk about LendingTree did a survey. This was basically in February. And what they wanted to find out is, okay, what are people thinking about selling a home this year? So of those that they surveyed, 63% have a positive outlook on the economy this year, number one. 69% have a positive outlook on housing this year. 71% said they are considering selling their home this year, which, first of all, is impossible because there'll never be a 70% turnover in terms of homes. But at least they're thinking that that's what they're going to do.
That's interesting.
That they're going to sell, and we need that.
It's an amazing high number.
Exactly.
So the question is how much of that gets converted to actual listings, right? Yeah.
Well, that's right, because, there has been a pent-up demand, selling demand over the last few years. Families lost both equity in their homes and confidence in the economy. Rising prices have returned equity to many, and an improving economy is again building consumer confidence. But let's always remember some of the math as it relates to when you buy and when you sell. If you were to buy the average median or average priced home last year, the mortgage would have been about $360,000, okay? The interest rate, 3.41%. The resulting principal and interest payment per month, $1,598.53. So as compared to today, what is the impact? And this is what it hurts both sellers and buyers when the price goes up because it's tougher for buyers to qualify. The same mortgage today, instead of $360,000,
for the same house.
Yep,
but it's gone up.
That's right. Mm-hmm. The mortgage needed this year is $409,680, almost $50,000 more than it was last year. And the interest rate, as opposed to 3.41 last year, is now 4.43%. and the resulting monthly P&I payment, $2,058.78 versus $1,598, and that is a difference of $460 a month. That is a significant number in anyone's budget.
Huge. And then you just scale that, for whatever house you're considering.
Right. So we need more inventory to slow that down, and to make it possible for sellers to sell and for buyers to buy.
And unfortunately, I believe, as my listeners have heard me say frequently, that part of the main problem we got into this situation, this last crash, was holding interest rates down too low and subsidizing it too much. And it really hasn't changed that much. And here we are going into the next bubble.
Well, that's right. And another factor which everyone is curious about, of course, is, well, what about mortgage rates? We already seen they've gone from 3.4 to about 4.3. And the expectation is by the first quarter of 2015, and this comes from 4 different very qualified sources, Fannie Mae is saying 5.1% first quarter of 2015. National Association of Realtors is saying 5.4%. Freddie Mac is saying 5.3%. And the Mortgage Bankers Association is saying 5.1%.
By what time?
By the first quarter of 2015. Not just barely 6 to 7 months from now.
Yep.
So it's going to go up even more. Another $460 is going to come out of people's pockets unless we can flood this market with some listings and a little bit of relieve the pressure on prices. That's really what we need to do.
Fascinating. Thank you. We have Richard Crouch today with us at the live recording in the Toll House Hotel in Los Gatos, celebrating our RE360 one-year anniversary for being here. And we're on KDOW at 1220 a.m., the Wall Street Business Network. And we'll be back in just a moment to have some closing thoughts and wrap up with Richard Crouch. So stick with us, and we'll be back in just a moment.
For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360Radio.com. That's RE360Radio.com. Again, your host for today's edition of RE360 Radio, Tom K. Wilson.
Welcome back to Real Estate 360 here. We're in Toll House Hotel, recording live here with Richard Crouch with us. Richard is a entrepreneur in Silicon Valley turned realtor, top producer in Alain Pinel Realty, and he's also an investment advisor for Transamerica Financial Advisors. And because he's an engineer by education and techie, he likes analyzing the market and does a great job at collecting that information and getting us updates periodically here for the Real Estate 360 Investor Program. Richard, what else can you tell us and recap here for the and some final thoughts for our listeners?
Okay, well, I think that what is the condition of the housing market today? That's an important question because it points to what we could expect in the future, as opposed to looking at the situation right now where it's hard to find homes, there's no inventory, sellers aren't selling. One might conclude from that the housing industry is headed for trouble. Maybe more from a social point of view than an actual analytical point of view. But let's just see what Freddie Mac has to say about the housing today and why it is stronger. Obviously, home sales up 13% since the low point. Housing starts up 50% since they bottomed out. House prices up 16% since the trough. And what are the projections going forward? They expect them to continue to improve. Home sales to increase 3% as the purchase market continues to evolve. That's in 2014, so that's 3% in 2014. Almost 20% of growth for housing starts in 2014, which will help ease tight inventories in many markets. Home value increases will continue their positive momentum, And the cumulative appreciation going out a little bit further is 19.7% by 2018. Even the most bearish predictions are 11% appreciation by 2018, okay? So it's not hard to understand why you can believe all this. If you're driving down the road and you see cranes out there, they're building buildings with homes and apartments and townhomes. That's because they believe these projections. And it's happening other places.
They have bigger marketing groups than you and I do.
That's exactly right. And it's true elsewhere in the country, like Miami, for example.
A lot of this information that Richard shared with us today is going to be on TomWilsonProperties.com and also be on Richard Crouch's website. If you want more information from Richard, they can connect up with you on...
That's Richard and A-N-D, Candace, K-A-N-D-I-S.com. Richard and Candace.com.
Great always to have you with us, Richard. This is if you want more, say, weekly newsletter on what's going on in economics as it affects real estate, go to TomWilsonProperties.com and sign up for our weekly newsletter. You can also ask for a report on how to select the best metro and the best product for investing in. And you can also get a lot of investor information on that website, TomWilsonProperties.com. So it's great having Richard with us. It's been nice here celebrating our 1-year anniversary at the Toll House, and we look forward to having you back for our next segment. Remember, the only thing that matters is what you do next. This is Tom Wilson, Real Estate 360. Nice to have you with us, and we'll see you on the next program. Thanks, Richard, for being with us.
Thank you.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360Radio.com. That's RE360Radio.com. AM 1220 KDOW.